What up, customers? What up, team? What up, everybody who rock with me? So this is your first set of wealth videos if you're on the Wealth Fundamentals membership. And this pretty much video gonna break down how the tax game really work, right? So I'm gonna give you the game so you can really lower your tax liability. You got any questions after asking, feel free to ask me, okay? So first I'm just gonna give you a breakdown of how the tax thing really work. So before a business, let's say you made 50,000 gross, you end up paying taxes on the 50,000 because there's nothing you can do about it. That's the first thing you're gonna do. So you end up paying 13,000 in taxes. So you really bringing home 37,000 a year. Let's say you're paying 25,000 a year on bills, so you're living off 12,000 a year. All right, okay. So now what we're gonna do, we're gonna tell you, look, go open a business so you can able to write off your lifestyle, percentage of your square footage, percentage of your cell phone bill, utilities, meal, travel, mileage, wages, right? And I'm gonna break all that down. And now what's gonna happen is since you got a business, you make the same 50,000 gross, right? But now your bills, most of them become business deductions because you was already doing these things anyway, right? I'm just gonna show you how to turn it into business deductions. Now, what the government let you do when you own a business, you make your money up front, then you deduct your expenses and you pay taxes on what's left after your expenses. So you make the same 50,000 gross since your bills business deductions now, right? Most of them. So now you're paying taxes on 25,000 instead of 50,000, right? Now you got to pay 3,000 in taxes instead of 13,000 in taxes. Now you're living off 22,000 a year instead of 12,000 a year. So that means you know made 10,000 a year just off the tax game alone, right? So pretty much how it works is how you're able to write off bills or your mileage, your travel, your wages. Just when you go, like, let's say it could be a honeymoon or a family vacation. Let's say you conducted business on that type of trip. You passed out a business card on a trip, right? You did a webinar on a trip. Now the trip become a tax write-off. Same thing with meals, right? I believe they put meals back in there. I know they had took meals or entertainment off, but I think it was entertainment. So let's go with meals, right? You go to talk business when your family go out, right? You passed away to a business card. Now you conduct business, so you're able to write off your meal when you go out to eat. Your utilities, let's say if you got an office in your home or you're running your business out your home front or something of that nature, percentage of your square footage if you got an office in your home, or your cell phone bill, because now you got to call people and tell them about the type of business you have, right? You got a consulting business or something of that nature. We'll go over that. Then, of course, your mileage. See, your mileage and wages are the biggest two tax deductions you can get. And I'm going to tell you why. So you just can't write off miles to say you went from your house, you had a business meeting in Atlanta, and you put them as business miles. No, you can't do it like that. What you have to do is you have to stop somewhere temporary after you leave your home. You have to do it this way. So let's say it's at a gas station, let's say it's a Starbucks, something by your home that can let you do business, right? So let's say you go to a gas station, you pass out a business card, right? Now from that gas station to your Atlanta, right? It could be to your auntie house in Atlanta, your uncle house in Atlanta, whatever. But from that gas station to Atlanta, now all them are business miles. Let's say if I stayed in Georgia, or let's say if I was going to New York, driving to New York or something, right? Driving into Detroit, something in that nature. I'll stop at a gas station first, conduct business, then I'll go proceed to my location. And all the miles from the gas station to my location can be business miles. All right. Same thing. If I wanted to track it back from the location I'm at to the gas station, pass out a business card, all of them business miles. But always choose something close to your home so you can maximize your mileage. All right. So make sure it could be a Starbucks, a McDonald's, anything in that nature. Just somewhere you can conduct business or pass out a business card or something. Then, of course, wages. A lot of people don't know that besides miles, wages are the biggest tax deduction you can get. When Trump came in office, they passed a new tax law. Like you can write off 12,000 a year, and the person you pay 12,000 a year, it could be your children for doing something in your business. You can pay them 12,000 a year in wages, and what end up happening is they don't even have to pay taxes on the 12,000, right? And I'm kind of break that down as well. So if you got any question with that, write your question down and ask me at the end of the video. All right. So I'm gonna give you a scenario, right? I make 100,000 a year trading. Right? I make 100,000 a year trade. Starter makes 100,000 a year trading. Then what I'm gonna do? right? And I'm gonna give you a more clear breakdown. I'm gonna hire on the bag investments to help me build my wealth. Okay. And then once I hire them, I'm gonna pay on the bag investments, LLC, 30 to 40,000 a year. You're gonna get the point I'm making, right? Then on the bag investment LLC, pay their employees wages. I don't know why I said for, so let me go back and change that. And pay their employee wages. And they might take a business loss for the year, or they might take a business loss for a year, or they take a small profit and pay a less tax rate because of deductions. So I'm gonna show you what you should do, right? You're gonna go get an LLC. It can be a consultant, something of that nature, where when you make a lot of money, and I'm gonna break it down to you, where you can actually be like, look, I hired this company to handle my money, right? So it gotta make sense. So for instance, I make $100,000 a year trading. So what I'm gonna do is I'm gonna go get some business deductions. So first thing I'm gonna do is I'm gonna pay on the bag investments 30,000 a year, right? And who the CEO of on the bag investments? Me. So now Trey Stargell, right? That's a whole different individual. Makes 70,000, not 100,000, because my bidding deduction got subtracted from my 100,000, right? So now my 100,000 minus 30,000. Now the government look at me like I make 70,000, not 100,000. Then I add on more business deductions from miles, traveling, doing business meeting, meals, right? Not like home cooked meals. Now don't do that. Like doing business meals, with traveling, etc. to lower my tax liability even more, to keep more in my pocket, even with a higher income. So I'm gonna make 100,000 a year. Boom! I told the government, look, I got some business deductions. I paid 30,000 on the bag investments, right? Then I had to go run my business to build on the bag investments because I'm the CEO. So now I probably end up making 50 or 60,000 a year, when really I still made 100. But I really want you to catch this, right? On the bag investment LLC, which is Trey Stargell, so the money went right back to me, right? So I paid myself 30,000, but I'm a whole different individual. Trey Stargell on the bag investments. Now what I'm gonna do, because I know the tax game, on the bag investments, they're gonna pay their employees 12,000 a year a piece, or up to 12,000. So now I paid my employees, which is my fiance, 12,000 a year. All right, and I paid my daughter 10,000 a year, because let's say my fiance run customer service, send out the emails for you all, right? Let's say my daughter clean up my office, put paper in my printer for me, right? So I pay her 10,000 a year, pay my fiance 12,000 a year. So now on the bag investment income is 8,000 instead of 30,000. Is y'all really getting me, right? So not only did I pay on the bag investments 30,000 say, hold up, government, I got business deductions because I had to pay my employee wages. I paid this such person 12,000 a year. I paid this person 10,000 a year, right? So now you can tax me on the 8,000. That's what I got left. I had to subtract my business deductions. Now on the bag investments, and Trey Stargell is paying less in taxes, even though Trey Stargell still got a six-figure income. And the income still in my household. My fiance got the 12, she ain't paying no taxes on it. My daughter got the 10, she ain't paying no taxes on that, right? So I still kept 22,000 off back in my household, right? Then I already paid. I made 100,000 trading. I pay on the bank investments 30,000, right? So now I'm at 70,000. Lower my tax liability some more, right? Then I took the 70,000 and say, look, I got another 20, 30,000 in business deductions, or really making like 40 or 50,000 a year, right? And I really still made a six-figure income. So now Trey Stargell is paying taxes on 50 and 40,000 as the individual, right? After all my business deductions from the wages I pay on the bag investments, then my miles, meals, my traveling, right? Cell phone bill. And on the bag investments, which I'm the CEO on, even though I paid them 30,000, they paying taxes on 8,000. And all the money is still in my household. Is this making sense to y'all? Right? So what you should do is go create an LLC for your own family. Or for yourself, right? Have that LLC do some kind of consulting, so you as an individual be able to pay the business entity to lower your taxes. Then hire your family to work for your business and pay $12,000 a year or less in wages. That way, you lower your tax liability all the way around to pay less in taxes with a higher income. Did that make sense for you? All right, so we're gonna recap it. All right, so it's very important as well. Pay all your employees, even though they in your family, with a check or some type of direct deposit to show a paper trail. Right. So if I pay my, let's say, fiance 12,000 a year. All right, I pay my fiance 12,000 a year. Well, I can't just say I paid her one lump sum of 12,000. That mean I paid her $1,000 a month. So does she get paid monthly? Do she get paid weekly? Whatever I say she get paid, right? If she get paid weekly, I pay her $250 every week. Send it to her bank, right? Direct deposit. She'll see $250 check or $250 deposit from me every week for on the bag investments, right? If I say I pay my daughter $10,000 a year, let's say if I pay her every week, right? That'd be over like 208, 209 a week. So I go open an account uh, for her, right? Of course, I'm over the account anyway. She'll see 209 a week deposited straight into her account every week, every week. So now if the government say, let me see proof that on the bag investments paid these people, it'll be easy because I have a paper trail. All right, so make sure you have a paper trail as well. It's very important. So let's go ahead and recap, right? Go ahead and recap so we can make sure we got this understanding. So boom, we're gonna get a business so you can lower your tax liability. You understand how the tax game work. I made 100,000 trading. I hired my own self, which is on the bag investment LLC. I'm the CEO to build my wealth, right? So I paid them 30 to 40,000 a year. Then on the bag investments, paid their employees, which is my fiance and daughter, right? And I either paid them to take a business loss for a year, so I paid them the whole 30 or 40,000, and I didn't make anything, or I can say, look, I paid them 24,000, and I made a small profit of 8,000 a year as on the bag investments, and I paid a less tax rates because of business deductions, right? So you're gonna go get an LLC. I kind of broke it down so you can understand it a little more. I made 100,000 trading, paid 30,000 to own the bag investment. So now the government look at me as I made 70,000 out of 100,000. I add more business deductions that I can get to lower my tax liability some more, to keep more in my pocket, even with the higher income, right? And these things I'm not creating. I'm already traveling. I'm already eating out. I'm already driving. These things you already doing. So you ain't gonna just go do unnecessary things, right? Even if I go out of town for a business meeting, man, I'm having fun, right? I'm gonna go out to eat while I'm out of town, doing all of that. So it ain't something you just not doing. You already doing these things. You just need to have the business mindset and be like, all right, I got a business now. I got an LLC, right? So now on the bag investment LLC, pay their employers, which is my fiance, 12,000 a year. Boom, she don't pay no taxes on the 12. You can't go over 12. All right, go over 12, they gonna have to pay taxes on it. I pay my daughter 10,000 a year. Boom. So now on the bag investments, and I don't know why that's spaced out like that. Typo. Now on the bag investment income is 8,000 instead of 30. Now on the bag investment and TradeStarter is paying less in taxes, even though TradeStarter still got a six-figure income, right? And the income still staying in my household. So if you ain't got no fiance and all that, be doing this to nobody that ain't in your household, right? It won't make sense. All right, so now TradeStarter is paying taxes on 50 and 40,000. After I pay on the bag investments 30, boom, I'm down at 70. Let's say I did another 20 or $30,000 business deduction from actually running my business, building it, right? So I made 50 or 40,000 a year as TradeStarter. Made 100 though. On the bag investments, isn't paying taxes on 8,000? I'm paying instead of 3,000. So you get it, right? Now what you should do is go create an LLC for your own family. Have the LLC do some type of consulting, so you and the individual will be able to pay the business entity to lower your taxes. But even when you paying the business entity, you paying yourself because you're the CEO, right? Then you're gonna hire your family to work for the business, right? You're gonna pay them 12,000 a year or less in wages. Boom. That way you lower your tax liability all the way around to pay less in taxes with a higher income. Okay, so that's why I say you shouldn't be paying. I don't give a damn what it is. Capital gains tax, I don't care what it is. Do not ever pay the government no 40% of your income. Ridiculous. Very important to pay all your employees with a check or some type of direct deposit to show a paper trail. So if you're gonna pay your fiance, Y'all can't be having no joint account, right? She need to have an account. You can't have a joint. You can have not a joint account. She need to be having some type of account. I don't care if it's her savings account, something that own the bag investment, not own the bag investment. Your particular company LLC is paying her. You know, if y'all having a joint account, I mean, you can do it, but it still need to show that your business, your LLC is paying her. The same with your daughter or something in that nature. They need their own account. If you got kids, right? Go open up an account, custodial account, and of course you over it anyway. Make sure you see that paper trail. See that paper trail from your LLC, and that's how you win in the tax game. If you got any question, ask me. If not, hope you enjoyed the video. Actually implement these things because I'm telling you, it's a killer come tax time. And that's how you're able to even get a refund even with $100,000 in income, especially if you got kids as well. And if you marry filing jointly, still get a heck of a refund, right? But that's it, man. I'm out. Be blessed, and let's go build a generational wealth.